and it is for 7:10 p.m. on Tuesday night, October 13th, 2020, and I'm late. This is your financial market wrap-up. I was at a dog park, and of course, my allergies are firing up from outside, which hurts me. I'm not allergic to dogs. I love animals. I love all animals. It's crazy. And in the city, my wife has a lot of animals. So to make a long story short, we decided to go to the dog park, take a walk, met some friends, and time got away from me. I was having a ball. You know, it's fun. I spent last night a good amount of time telling you that I thought a strong up day on a Monday would lead to a break on a Tuesday. Stock Traders Almanac explained it. It happened. Okay. Now you're getting a bounce back in the market. So we're going to take a look at that. The gold and the silver markets are going nowhere. You still don't have any inflation. Look at the CPI report that came out. Now, tomorrow we're going to get the PPI numbers, I think, but I'm not expecting inflation. We're sort of flat in all the energies. We have been rallying very nicely in the bonds and notes, but remember, it's a contra-trend rally. The trend had been down recently. This is the bounce. We don't know where it runs out of momentum. And in the grain markets, they're still all over the board, but still well bid overall. On the S&P, if we take a look at this point in time, we're at 35.10 over on a weekly basis, the highest weekly close we had at 35.0450. When we spend a little time and look at the daily bar chart, I'm going to leave this inverted head and shoulder to see if I end up right or wrong. But this is the head, a shoulder, a neckline. You broke out. You've now got an inside trading day. We'll see if a market runs through these highs. That's what I'm waiting to see basically on the chart. What is the trend? Up and away. You've still got higher lows, higher highs. That part hasn't changed. The market is well over the 18-day average of closes. So to get back to that number, you've got to drop in the neighborhood of 130, 140 points. That won't be easy. The market's backing away tonight from the upper Bollinger Band, but it's hit it on a regular basis. And if we look at momentum, it's embedded. So it changed its gear on you. Now the momentum embeds, so that means pullbacks in the market should be pretty well bid. That's what I'm expecting. When the red line closes under 80, that's when I think you're out of the market. Should the market drop on you and you buy it, I'm still looking at resistance 35.49. In the NASDAQ, we keep hitting each and every day the upper Bollinger Band. What is it, 5 in a row now? Or four in a row. So we're at that point where we're about to call it a gorilla glue trade, especially when I told you, when you get this type of trade, and you stay by that band, you start pulling the slow stochastic to the point where it embeds. And that's what is the case. Now, there are instances where you embed and it forces, if you will, numbers to go to that Bollinger Band. But you always got to recognize that once you're beyond 3 days of hitting it, you're going to be yanking on that stochastic if you're at the top band, pulling it up. The opposite is true if you're dropping. So you've got to always be looking. Are we trading in the NASDAQ? No. Are we in a bigger uptrend? Absolutely yes. You don't get back to these numbers and say, I'm in a downtrend. In terms of a trade vehicle, it's been difficult because you've had a lower and low, higher high. That's what I mean by it's been a difficult vehicle. The embedded reading drop. I expect to see buyers step out aggressively in the market and bail on it if the red line closes back under 80. But if they can buy it well under the Bollinger Band and keep the embedded reading, I think that'll be their target. In the Dow, you have the pattern of higher lows, higher highs. It too joined the embedded world. Welcome aboard. And as such, on these pullbacks, I'm looking for buyers to show up. The resistance is the upper Bollinger Band. Again, lose the embedded reading, the game changes. In the Russell's got the higher lows, higher highs. Today finally was a day nicely away from that upper Bollinger Band. It's been there every day. And often when you get a day or two away, it's giving you the time frame that you can come in as long as you keep the embedded reading. When I say can come in, if the reading is embedded to the bull side, I'm bullish. Bear side, I'm bearish. So I'm looking for the pros to be buyers, and I'm still looking at higher highs near that 1686 level. You see the upper Bollinger Band. VIX cash, neutral is the 18-day average of closes. So today's high, 26.93. The 18-day average, 26.95. So you've gone from upper Bollinger Band to lower, back to just about center line, not doing much of anything. In the T-bond market, I cannot answer for you if you're going to get up to this 18-day average. It's done just about everything I could ask of it. The market, once it cleared the high here, has just rallied consistently. I'm still looking for that number, but it's done its job of satisfying me. Same thing here. When we lost the embedded reading, unfortunately, it was today. If you get through that number, you're looking for the closest moving average above you, the 100-day. Look where it went today. So I don't care what it does. It hit my target. Dollar index. When we got down here, I was telling you that I think that the pros were stepping out at a window envelope number. Now, my subscribers know what that is. I don't give you everything here, but that's what I think that the market stepped out at. I would not be surprised to see an attempt to work off the oversold condition at least to the 18-day average. That's 93.83, and it's very possible to take out that high and just end up in this sideways action again. The trend is down, but it's oversold. Eurocurrency, the trend is up, but it was overbought. Now it's corrected to the point where it's not. So when it's not, what number do you think shows up as the support? You got it if you said it. That 18-day average of closes, trend up, didn't have the power to get to the upper Bollinger Band. If you can hold and not get through this break low, that's very much in play as the market is now past tense, worked off the overbought condition. Japanese yen, what's our line in the sand? 18-day average of closes, it's right where you went to, and you stopped on a dime there. What about Bitcoin? As I said, staying over that upper Bollinger Band, very difficult in an overbought market. I look for this market to pull back. Could it go higher? Anything can happen. Am I bearish? Absolutely not. The trend is up, but it's ahead of itself. Wait, that's at least what I'm telling my people. In the Brent versus WTI crude, you got up and flipped over the 18-day average of close, and you're staying there for a few days, which means Brent is a bit stronger than the WTI. When you look at the chart action, you have a lower low, a higher high. You're basically caught between the 18-day average in red and the green. Back and forth action. You rallied enough that if this market were to take out 41.35, it would, in my opinion, be issuing a sell signal, possible target back to the 40.29 level. And if it did that, you wouldn't want to get over either yesterday's high or today's, the highest of the two. In the WTI, I see a similar pattern. You've got the higher high and lower low. You're over this number. Nothing can throw out a buy signal. The only signal that can happen in both, according to the swing line, is if you took out today's lows, and then you'd have your stop and possibly looking for the lower Bollinger Band. As I just said, nothing can throw out a buy signal. Heating oil is still very much in a bullish mode, but very overbought with it. Difficult to buy markets if you're a professional trader or analyst as I am that are overbought. You learn to wait your turn. Doesn't mean, by the way, don't get married to natural gas, heating oil, whatever. I'll trade a hog contract. I'll tell you to buy sugar, as you know, cocoa. I'll trade anything. It's a chart. You're looking for the pattern. That's the way it goes. When you look at this market, as we approach the upper Bollinger Band, I was warning you, that's a resistance. Now, this is support. And as you know, I am of the opinion a major low has formed here as we get into the cooler weather of the year. So the question is, what will the pros do? The market is not overbought. It's neutral at 31.78. If they buy there, it's a heck of a risk because you got to risk down to $3.59, 3.059 under that most recent low. I don't know. This is a zone that I can argue could see support in the market to keep the bull trend alive. We go through this each day, and I love doing it. And I don't want to put an ad up right now, but I want to remind you what I do. This is the leader into the subscription report. The subscription report starts you out at the price of a Starbucks coffee with your tip for $7.95, okay? No tip on what we offer. You get 30 days, well, let's call it with the weekends and all, probably 26 days or so of videos. I do a weekend video that only you get with all this. It's not like I put out here on YouTube. It is with all the buy here, sell there, long term, with the daily. You get that. I start recording at 5:40 in the morning. I picked that time in case you've ever wondered. I want to see the Asian news. I want to see European news. Add the time in Europe. Noon's when a lot of things happen in Europe, so I want to see that. And in Chicago, it's beyond that. And then I'm posting. I also do it because you're sleeping. So if I got up and when I get up and just recorded right away, very few people would look at it because they're still asleep. Why do that? I want you to catch it before the what we call the pit traded times, the old times, be it 7:30 in the morning, 8:30 when they're still opening in the New York Stock Exchange, the markets. I want to tie into all those traditional times, and by getting this into your hands around 6:30 in the morning, I think you find it worthwhile. So go to our website. You can even look at the free offers. I offer a free 2-week trial to all my research. That'll get you the ETF videos. That'll get you the daily videos, my subscriber videos with it. Give it a try. What do you have to lose? I'm Ira Epstein. You have a great day. See you tomorrow.